The world just received a brutal wake-up call. In a stunning shift that shatters hopes of easy money returning, the Bank of Canada is now expected to raise interest rates in 2026, not cut them. That single signal sends a terrifying message to markets, homeowners, investors, and governments alike. The era of ultra-cheap money is over, and it may be gone forever. For years, the narrative was clear. Inflation would cool, rates would fall, and borrowing would become painless again. That dream is now collapsing. The reason is simple and dangerous. Runaway government spending is lighting the next inflation fire, and this is not just a Canadian story. A global rate shock is coming. What's happening in Canada is only the first warning shot. Analysts now say every major Western economy, the United States, Europe, the UK, Australia, may be forced into the same corner in 2026. Instead of cutting rates, they may be forced to hike them again. Why? Because governments across the Western world have unleashed historic reckless levels of spending. Massive defense and war budgets, exploding social program costs, housing subsidies, climate megaprojects, infrastructure spending, soaring interest payments on national debt. The bill for this spending is now coming due, and the result is a dangerous setup for a second, even more violent inflation wave. Forget rate cuts. Even the US Fed may be forced to hike again. Wall Street has been betting on Federal Reserve rate cuts in 2026. That assumption is now under serious threat. If inflation surges again due to government overspending, energy price shocks, wage inflation, commodity supply disruptions, currency instability, then the Fed won't have a choice. It will be forced to raise rates again, even if that means crushing growth, crashing markets, and pushing economies toward recession. That would mean higher mortgage rates, higher rent, higher credit card rates, more defaults, more layoffs, falling stock prices, exploding government debt costs. This would be a global financial shock, not just a policy tweak. Why 2026 is the most dangerous year yet? All the pressure lines converge in 2026. Government debt rollovers at much higher rates, massive fiscal deficits, post-election spending binges, energy market instability, supply chain reshoring costs, aging populations demanding more spending. This combination is inflationary by design. And when inflation explodes, central banks have only one weapon. They destroy demand with rate hikes. Ultra-cheap money built every major bubble, and now it's dying. Cheap money created the housing bubble, the tech bubble, the crypto bubble, the private equity bubble, the government debt bubble. Now that money is no longer cheap, and it may never be cheap again. Bottom line, the Bank of Canada's move signals something far bigger than a single rate decision. It signals a permanent shift in the global monetary order. 2026 may not be the year of relief. It may be the year the world learns. Easy money is dead, and it's not coming back.